What do you think about just the futures under some pressure today? Are you concerned at all about the Santa Claus rally and it not actually happening and what that could mean for 2025?
Well, we've had quite a rally already in 2024, and this has been a very strong quarter. I mean, let's look at the numbers. 26% up in 2023. The market's up about 25.5% in 2024. I call that a lot of rally and plenty of gifts from Santa Claus so far.
All right, I'll keep that. You think Santa already delivered, so we don't necessarily need the rally. That's pretty funny. What's your word of the day? How do you see today shaping up?
I'd give you the word ceiling. And I think ceiling is a critical word for this time of year and for into next year. Let's talk about the debt ceiling, the spending ceiling. There are a lot of people who want to keep a ceiling on spending. We've got perhaps a ceiling on valuations. We've had a lot of increase in price, as we've talked about. So who knows if that ceiling can go higher on price earnings multiples or ceiling to valuations. And that's something we really need to keep in mind going into 2025.
All right, so I want to ask you about that. So the S&P is trading at about 22 times forward earnings. Are you saying that's an area of resistance for the market, stopping it from going higher? I mean, exactly what is the ceiling there when we're talking about valuations?
Yeah, I think that there's something to that point. There have been two times in recent history, right, or any history when the multiple has gone higher than 22 times. Once is COVID. At the depths of COVID, we didn't know what earnings were going to be. The expectations were very low, so the multiple was extremely high. So you discount that, and then think about what happened in 1999 at the beginning of 2020, the dot-com bubble, and that multiple was almost 26 times. But there were a lot of sort of speculations going on in the market. 22 is a big number. It implies that we need a lot of growth for this year. First quarter growth is going to be 8 to 9% earnings growth. For the full year, we're talking about mid-teens to higher teens. But, you know, numbers come down through the year. And I think that we need to see a little bit more of the reality of what we've got in the first quarter for the market to believe that we can continue to sustain a multiple number in the 20s. It's not to say that earnings aren't growing. They are growing. We've got GDP that's positive. We've got a setup that is very good into 2025 with lower expectations for regulation, business-friendly environment. A lot of that is in the price of stocks.
Carrie, I know you have a pick for us today. We want to get to that right now. What's your pick for us today and why?
I'd say it's controversial. I mean, I can't say Mag 7. That would be ridiculous. You know, everybody's saying that. So I'm going to just give you healthcare because it's been such an underperforming group. This is the worst sector of 2024, one of the worst in 2023. If you look at the multiples of the big cap names in the sector on the drug side, whether it's Merck, Bristol Myers, Pfizer, these stocks sell for half of the market multiple. And on the biotech side, it's the same engine, Biogen, really terrible stocks for the last couple of years. And even on the device side, whether it's Thermo Fisher, Abbott, these stocks have trouble. They're struggling. And so we looked at some of the names. We own a couple like Thermo, Abbott, Steris, we think is very valuable, but you can really think that over the next year, if you're looking for a group that can sustain cash flow, has innovations, has been unrecognized, is really worried because what might happen with the next administration. Healthcare is an interesting idea, just like financials were last year when nobody thought anything positive would happen after the Silicon Valley Bank and First Republic debacles, or energy in 2021 when everybody thought the price of oil was going to be zero for years for some reason. And that wasn't going to happen, and it won't happen with healthcare.